if you have watched before these lives, this is I am trying to teach you how to analyze uh, commercial properties, uh, just like the big guys. And this time I'm gonna analyze one market on the West Coast. It's Los Angeles. It's a huge market, huge market. I really like California. I really like Los Angeles. And last time I post like 2 weeks ago, I post a poll in LinkedIn, so you can vote every time I make a new episode of Chasing the Deal. You can vote the market you want me to analyze, and we are going together to analyze this market. We are going to see the analytics, the market size, the vacancy, any data you want to analyze in that market. Maybe you live in Los Angeles or you live in San Diego. This time the poll was Los Angeles versus San Diego. So if you are looking to invest in San Diego or maybe Los Angeles, you can vote of the poll. So the next time I analyze that market. So this time we are going to analyze that Los Angeles, because Los Angeles get more votes on the poll. But if you want for the following episode of Chasing the Deal, please follow me. Follow me on LinkedIn. You can follow me. You can find me as Andres Vite, or you can follow my company website that it's the Nearshoring team, and you will see the post, so you can vote on the market. So let's get inside the the analysis of this deal. Let me go. Let me show you the CoStar. Yeah, as always, we are using CoStar. I think you can see me. Let me fix. Please don't leave. Let me fix thing with the camera, because I think you cannot. I'm frozen in the camera. Uh, I think I'm frozen. I don't know why I'm. Let me fix it. Just hold me. Just hold me. Because, oh, I don't like this software. It always have some kind of trouble here. Let me try. Okay, I think now I'm not frozen. So you can now see me. Hopefully you can also hear me. But let me show you. Let me show you the market. This is the CoStar. This is the software I told you about. So in this software, this is one of I think this is the best market property analytics software on the market. If you want to just access this software, you have to pay like 1,000 US dollars per month. But here you have it free with me in this episode. And also, if you see all the episodes here, you can download the report of the on the Los Angeles market report for the industrial properties. I will write the link down in the description of the event. Also in YouTube, you can access it. So let me show you. I have already. As you can see, you can surf here, and you can see several markets on the U.S. You can see several markets on the U.S. This time we are going to analyze this one, Los Angeles. So you can see the west area. It's breaking down in several markets because it's a huge market. You know, we have the biggest port in America in the Los Angeles. I think we have the two biggest ports in America. Los Angeles, and I think the other one is Long Beach. But but those are the biggest the biggest sports in America, and we have a huge market here. But we are analyzing just part of this market, which is this one, Los Angeles. So let's gonna see the data of the market. This is the reports you can see in CoStar in this software. Uh, are very complete reports, are up to date. This report I just got it from this information is updated as today. So you can see, for example, you can see a summary here of the market. You can see the inventory in the square feet for the industrial market here, which is 961 million square feet. That's the actual total size of the buildings you have on industrial properties in Los Angeles. And you can see also, for example, here the size of the buildings that are the total size of the buildings that are under construction. And you can see also, this is a very important KPI. This is a very important number. You can see for example here, the net absorption. And what is the net absorption? The net absorption is the number you get by subtracting the vacant space with the absorbed with the rented space. You know, if you had 1,000 square feet of space vacant, but then you have a new tenant that rent 2,000, you have a positive absorption of 1,000 square feet, which is a good thing because it shows you that the market it's absorbing. That's what it calls absorption. It's absorbing new square footage on the market, so you will be able to build new buildings. So basically, what we are seeing, where we are seeing here, it's a negative absorption. That means we have more vacants that tenants moving in. Okay, but there's there's a strange thing because we have a low vacancy. For example, in Dallas, we have a vacancy on industrial around 9%, I think, if I remember well. But here we have a 6.4%. Okay, so that's a good sign. But we can see here the vacancy it's growing, and also we can see here like the current vacancy it's 6.44%, but the year ago it was 100% points less, almost 100%. It's 5.65%. Okay, so that means the vacancy is growing, so more tenants are moving out of this market. Okay, so we have also the market asking rate, which is high because it's California. It's a high income market for the people that lives there. So we can expect the rents to be higher in comparison for example, Dallas or Texas or the maybe the southeast of the U.S. And we also see a high market sale price per square feet. Okay, this means two things. The price in the West Coast is, of course, it's higher because it's higher income, but also it should show that this is there are new buildings selling on that market because new buildings are priced more than old buildings. So I will choose the second option here. We see maybe new buildings getting sold in this market, and we can also see here the cap rate. What is the cap rate? If you have watched me before, You probably know that cap rate is the one of the best indicators of investing. If investing in a deal it's good or it's bad, because if you have a lower cap rate, it means you can sell to an investors uh, more expensive your building. You can sell more expensive the building, but also it means that investor it's not gonna get a lot of rents for their investment. And also if you are the investor that it's purchasing the building, that means that investment is not as good because you are not getting uh, much of the rents that you can get, for example, in Dallas or in other market that has a higher cap rate. So a good investor, what is looking, it's purchase at a higher cap rate and then sell maybe after 2, 3, or 5 years at a lower cap rate. That's what cap rate compression means. Okay, so to do that you have to maybe fix the building or attract more credit tenants, but you have to do something on the property in order to compress the cap rate and you can sell the property higher for the same rents. Okay. Okay, so as I told you, the net absorption in Los Angeles it's negative. That's a bad thing. Uh, it could be, I think, it could be because the tariffs, because Los Angeles port, it's as I already told you, is the biggest port in the U.S. But the biggest importer from in that port is China. So if you see the news, you know that the U.S. government is imposing tariffs to China. So that those tariffs it's impacting on the Los Angeles port and also in all the supply chain in California or in that is close to Los Angeles. Okay, so it is probably there are two factors here that may explain the negative absorption here. One is the tariffs, okay, and two it's the population that is moving out to the west, because many population, and this is not like from this administration, this is like from 5 to 6 years ago, before the pandemic, we started to see many people moving out from California to states in Texas, Florida, and other states in the East Coast or in the South. So that means you will have less logistics suppliers there. Because if you are, for example, Amazon or you are Walmart, you invest in a logistics center or distribution center where you have the market. So if the market is moving out, that means you don't need as many as a space that you needed before. So that may explain those two factors may explain the negative absorption on the market. Okay. Okay, so we see the vacancy rate growing. Uh, okay, demand, net absorption. As you can see, this is not. You may see, okay, that's for all the U.S., but it is not. But you can see here that the absorption here in Los Angeles is negative absorption, but um, in the US it's positive. Even it's dropping, but it's positive. Okay, in the US. And you can also see here some very useful graphics here in CoStar, excuse me, you can see, for example, a comparison of the on the numbers with past numbers. For example, you can see the vacancy rate here is high, it's all-time high, you know. And this blue bar is the average, okay, the average high and the average lower. But we are the average is 3.22% in the second quarter of 2022, okay. For example, what else? We can see the net absorption here. Market asking rent. Please, if you have any comment, any comment like in YouTube or maybe in LinkedIn, just leave the comment and on the chat. I will try to answer before ending this, before finishing this live stream. Okay. So we see the volume also. We see a peak of volume here. Okay, in 2022, sales volume in the pandemic, all the country in 2022 was selling huge selling volume, compressing cap rates, and then after that dropping. And that's why in many markets in the US, because 3 years ago, in 2022, the sales were growing. Many developers start building new space, okay. But you know, you don't build the space and you don't have it available the next day. In industrial, if you start building, it will take you at least 1 year until you can rent it out, that space, at least. But most probably you, after 2 years, you will start being able to lease it. So if you started building in 2022, that means in 2024 that the space becomes available in the market. So that affects the vacancy also. Okay, occupancy. We can see this graphs, net absorption, deliveries, and vacancy. We can see the deliveries, net absorption positive. We have we are 2025, okay. As you can see, we have a negative net absorption, and this bar are the deliveries. But we are gonna see a positive net absorption. The forecast says we are going to see a positive net absorption in 1 year, in the third quarter of 2026. And also we are going to see start dropping the vacancies almost at the same time. Okay? So that means if you start building today, you may be able to rent it out, the space, in 1 year, because we will have a positive net absorption. Okay. And if you finish the building, the construction, in 2 years, you will see even bigger net absorption. So that means probably the cap rate you will get compressed more. So in summary, what I recommend in this market in Los Angeles, I recommend, I will not say I recommend it at all. But if you invest in this market, it's not investing to with a core strategy, but it's more like a ground up strategy. And let's see which niche we can choose to invest in, because most of the players here, in speaking about the tenants, most of the players here are big players, and also most of the buildings are big buildings, are like 500,000 square feet. Okay, so we are not seeing small buildings here. And also there's one thing here in this market. There's a new tax, a new transfer tax for properties over 5 million. So if you can find maybe a small warehouse here and invest, that cost and you can sell it for less than 5 million, that may be a good investment, but you have to double check the numbers. Okay, but most of the properties here are for the big players. Let's see, for example, here, let me show you the players here, because when you invest in a market, it's good to see who is playing along with you, who are the players. So for example, the buyer type here, almost half of the buyers are private buyers. Okay, and private equity, those big guys are just 3% players. Okay, institutional 24%. So what makes different institutional from private equity, for example, or maybe REIT? Because these institutional and REIT, they acquire core properties. That means they don't build new properties. But the people that build new properties are the private equity and the private parties. Okay? Also the seller. So we can see here private equity is not a big player. Mostly it's private investors, like companies. What does it mean private? May mean an investor for investment property, which is a property you get income, you get rentals, or maybe the companies also that purchase, like for example Coca-Cola or Pepsi, that purchase properties for investments. And we have also the user. That all are the companies that invest in assets to use it. Okay, so let's top sellers. As you can see, here are some of the names of the buyers: Blackstone, Centerpoint, Prologis, Ares Management. You can see Rexford Industrial, for example. It's huge player here. I really don't recommend like this market for beginners, to be honest. If you are a beginner in the industrial market, maybe Texas is a better place for you. This is more for big players. And also, the cap rates are not that big. You know, the market cap rate, it's not that big for the risk of this market, because this market is risky, because it's losing people, and the tariffs it's affecting this market. So I would expect a cap rate maybe double for to pay for that risk, you know. So Only if you are maybe a user, or I don't know, just a big player that wants to invest in logistics, I will invest here. But otherwise, for an investor, I really don't recommend. But even I don't recommend. You may find a good deal in any market. You may find a good deal. You know. Okay, so let's go. Let's analyze the properties here. Let's see which deals we have here. So here in CoStar we have uh, this section properties where we can find the properties that are on the market. Okay, for sale or for lease. In this case, we are looking for sale properties. Okay, so we are going to search for Los Angeles. Okay. Excuse me. Okay. We have we can filter up here, or we can filter up here in the sales section. Okay, so we choose industrial. We may see flex buildings. Let's see flex buildings. Uh, for those of you that don't know what the flex building is, it's in the middle of an office and an industrial building. You know, in an industrial building is more like for logistics. It has a high clearing, and it has for example, high base for the trucks to load, and for example, the flex building, it's more like the clearance is not that high, probably 15 feet, but you can use the flex building as an office. You may have a 30% office space, and then 70% logistics space. But these are more like for service businesses that are local, like for example a roofing company, a lawn care company, construction company, or maybe last mile distribution. Those are like the flex buildings. So let's try to find a small building, because I already told you this is a market with is mostly for logistics properties. It's mostly for the big like Amazon, like Walmart, like those companies that wants to invest in logistics and distribution center. But it's also a huge market for example, the flex buildings, I think. So I'm curious about this type of properties. So let's reduce the search for flex buildings. You can see there are no many flex buildings. Okay, 106 properties. If I include the industrial, let's see, 1000. So that confirms my theory. So this is market for industrial, mostly logistics properties. But we are not going to invest in a 1 million square feet warehouse, because it's too much money. But let's try to find something on the flex building space. Even it's reduced market for that, but we may find something interesting. So there's one huge with the flex buildings. When you invest in flex buildings, as I told you, these are more like for service business, service companies. So you have to try to find something that's close to the most market you can have. So it must be close to the downtown. Okay, so let's see, for example, building size, property size. Okay, so let's see a maximum of 50,000 square feet. Okay, okay, 50,000. Let's choose an old building, or let me think, maybe a building with a mortgage due. Maturity within the next 1 year. Oh my god. Okay, maturity within 2 years. No results. Okay, so, oh my god, what happened? Oh, for sale, flex, property, 50,000. Okay, we didn't find a maturity within the next 2 years. So let's try to find an old building. Building built. Let's see. Maximum built 1970s. Okay, so for example, this one, 2.8 million. 2.8 million. We have this one. It's almost 9,000 square feet. Manufacturing. Okay. Looks good. Available. Okay. So let's select this one. This looks good. Okay, 2.8 million. So that means we can exempt the transfer tax because it's less than 5 million, unless we sell it for 5 million or over. So let's say light manufacturing. So you can see here it's almost double price. Let's select, maybe we can find something here, but it's a little bit overpriced, I think. Oh, it's 2 properties. Okay. Let's select. This is 6 million. Okay. This is in the west. It's a little bit bigger. 12,000 square feet. Built 1921. Okay. So we have 3 selected here. We have 3 selected here. So we have this one, 12,000 square feet, built in 1921. They are asking 6 million. Okay, it's very close to the downtown. We have this one that it was built in 1940, 1914. It is almost 9,000 square feet. It is also close to the downtown, and it says it's zoned for manufacturing. And we have this that looks like a church, and it's zoned for light manufacturing, built in 1903. So which one do you want me to analyze? Let's do a small poll here. So which one do you want? Let's say this is the let's say this is the biggest one, the 6 million, the 3 million, or the 5 million that is a church. Which one do you want do you want me to analyze? The 6 million, the 3 million, or the 5 million? Let's start the poll, and I'm gonna let you to vote. It's 11:41. At 11:42 we're gonna decide which one win. Okay, so tell me which one. And remember, if you are watching me, on LinkedIn, you can also watch me on YouTube. I have a channel on YouTube. And the same way, if you are watching me on YouTube, you can find me on LinkedIn, and we can connect. So my YouTube channel is the Nearshoring guy, the Nearshoring team. Okay, so let's wait for people to decide which one. Okay, I will repeat the options. It's option number 1. It's the 6 million building. It's west to Los Angeles downtown. Then we have the 3 million building. It's a manufacturing building built in 1914. It's a 9,000 square feet manufacturing building. And then we have this 6,500 square feet light manufacturing, South Los Angeles downtown. They are asking $4,700,000 US dollars, almost 5 million. So we have the 6 million, the 3 million, and the 5 million. Which one do you want me to analyze? Okay, I think it's 11:44. So we have I think we have a winner. We are going to analyze this one, the 3 million 9,000 square feet manufacturing building built in 1914. I think this is a good opportunity. Let's see what we see. Okay, first thing, we have a small lot. And this building is 2 stories. It must be more like an office than for manufacturing, but maybe if you have some tenant that is some light manufacturing. Let's see the pictures. Okay, like maybe you can have a tenant that has a studio here. Looks like an office, maybe an art gallery or something, maybe. It's also the option. Let me tell you something. We have to this is not for beginners, of course, but if you like risk and you maybe have some experience with flippings, with house flippings, this may be an opportunity for rezoning. Rezoning, you have to watch how the rezoning laws works in Los Angeles. But maybe this is not a good area for manufacturing or office, but it's a good area for multifamily, or maybe for multifamily. So let's say you rezone this building, this to multifamily, you can make some kind of loft units here. As I told you, they have a studio. This is for a studio. Okay, so this is good. This is good opportunity for a studio. Maybe also you can, many co-workings, what they are doing, they are including these kind of spaces for filming, like YouTube videos or like Instagram, like social media, and they rent it out for YouTube creators or influencers. So you can do something similar here, and maybe you don't have a long-term lease here, but you can operate here as a co-working or something like that. Maybe it will work. Okay, you see it's close to the downtown. Yeah, so I think this will work fine for like a co-working space. I definitely rent that piece of space. It looks like it's not very deteriorated, even it's 1945 14 built. Okay, so we have this data from CoStar that it was sold on 2015 for almost 900,000 square feet. It has a cap rate of 7.61%. A little bit over than the market cap rate, which was I think it was 5. Let me see, which is 5.1 for industrial. But of course, these are larger buildings, and usually for smaller buildings you get a higher cap rate. So I don't see it like a crazy investment. I really see like not like a not very risky investment here, because the building looks good. Even in the pictures, you can see the structure looks good. Of course, you have to run your due diligence here. But if you are going to have like a co-working space with this kind of creative spaces here, I don't see like a big deal with the tenants. because it's more likely that they will come and go every day, so they will not stay all day long there. So if the AC stops working, it's not like a big deal. Well, you have to fix it, but it's not uh like you will have like tenants, like 50 tenants, 50 employees all day. So for a co-working space, I think it's a good space or like creative, maybe an art gallery also. Or maybe if you feel more risky, you can you can take a value added strategy like rezoning, repurposing this building, and you may get maybe a little bit more for that. You have to analyze the risk, of course. Okay. Oh, flood. Let's see, lease. They have long-term leases here. Okay, what you can do here, if they have long-term leases like this they have in the streets 105, they have an industrial tenant. Okay, so let me tell you something. 6 leases. Okay, what I will do here is uh you know uh I will quit the industrial tenants, and way I will maybe I will divide the space in two parts, one for long term office, and the other half for co-working, with some spaces like creative spaces and kind of that. And the co-working, it's like the Airbnb for office, you know. So you can get a little bit more rents if you rent it for co-working than renting on a long-term lease. And that way you will raise the rents. You will raise the rents because you will have higher rents. And that means if you have higher rents, you can sell the build. You can increase the value of the building. There's two you can increase the value of the building. The first way is you have to increase the rents. But to increase the rents, the market has to support, has to demand those rents. It's not like you are having $10 per square feet and you decide to rent it for $15 per square feet. If the market is not willing to pay you $15 per square feet, you will increase the vacancy, okay, or you will not rent it at all. So the first thing is you can increase the market rents if the market rents are below the market, which I think it's not the case here. I don't really know the market rates here in for office spaces here in Los Angeles, but I don't think at almost $30 rent it's low, so you probably have a market rents here. So this is not there's no space to increase the rent unless you're renting like a co-working space, because if you rent it like a co-working space, you can ask for more, because you are not having you have the you are having less time, less term for the lease. So you can, it's the same thing as I told you, like the Airbnb. You can rent a house maybe for $2,000 a month, but if you rent it out in Airbnb, you may rent it for maybe 4,000. You have to pay expenses, you have to pay everything, but anyway, in office, you many times you have to pay some kind of expenses. Okay, so the first thing, you can rent it as a co-working space, and the second thing you can do to add value is to compress the cap rate. So if you have a cap rate here that is 7.61%, you can compress the rents by bringing in better credit tenants. So if, for example, you have mom and pop businesses here, you may bring like a law firm, like a respectable or famous law firm or CPA firm, which I don't think you can do in this building because it's small building. So I don't think you can compress the cap rate here. But I would recommend that. I would recommend to make a co-working space here. And you may, if you increase the rents, maybe your value will go from 2.8 million to maybe 3.5, let's say. So after a year, you can bring that cash flow to the new investors. You are selling the property, and you can prove that you are earning that rent, that net operating income. Okay, so that's what I recommend in this property. Okay, so but maybe I'm wrong, maybe you are not, you don't like this way to do it. What would you do with this property? What would you do? What would you maybe you have another idea. Maybe you have you live in Los Angeles, you know how to rezone the property, and maybe you tell me you're wrong. I will do maybe let's say a multifamily with lofts, and I will sell those lofts in, let's say, 1 million each loft. I will make condos or something. Maybe, I don't know. But if you are going to risk in those kinds of strategies, you have to be a pro. You don't have to be a beginner, because real estate is an industry that many things can go well, but many things can go wrong. Okay, but if you have any other idea, or you think I'm wrong and this is not a good investment opportunity, well, you can comment. You can send me a connection request on LinkedIn, or you can follow my YouTube channel. You can find me at the Nearshoring team on YouTube, and you can find me as you can search on the top of the LinkedIn bar. I'm Andres Vite, and you can send me a request and I will accept, of course. Also, if you want to know more about this market, if you want to download the full report like this, like all this data that maybe I didn't show you all the report, maybe you are willing to invest and you want to know more things about Los Angeles market, and you don't want to pay $1,000 monthly to CoStar, you can go to my website. I have a section here in the market report. You just press here, market report, and you can download market reports for several markets, like Los Angeles. I have some here, But if you don't want to download any other market, you just log in. I have any cities, not just these cities. I have more cities inside, and you can download the reports. Okay, and if you want me to help you to choose a property, to find the market, to analyze an industrial property or maybe an office property, I can help you, of course, with that. You can call me. We can schedule a call, and I will leave you the link inside the description to schedule a call. So that's all, guys. So thank you for your time. Thank you for watching me. I hope this information is useful for you, and I will publish on LinkedIn the next episode for the market we will be analyzing. So if you want to vote for the next market we will be analyzing, you can follow me on LinkedIn, or send me a connection request, and then you will see all my notifications on my post, and you can vote on the next episode we will be analyzing. So thank you, guys. See you next time. Bye.